An example of the efficiency ratio is the days sales and receivables ratio, which is also called the days sales outstanding ratio. The days sales outstanding formula is 365 divided by the receivables turnover. We can substitute directly in this formula if we calculated the receivables turnover ratio earlier. The receivables turnover formula is sales divided by the accounts receivable. Or we can rewrite the days sales outstanding formula as 365 times the accounts receivables divided by sales. We get the accounts receivables from the balance sheet and we get the sales from the income statement. Please note that the income statement is a flow account, which means it is calculated over a year, while the balance sheet is a stock account, which is calculated on a certain day. Since we cannot compare a year to a day, we need to convert a day into a year by getting the average of the two balance sheet items. So we will use one income statement and two balance sheets. In summary, anytime you find a financial ratio that includes an item from one income statement and an item from a balance sheet, you will use the income statement item and get the average of the two balance sheet items. Since we can rewrite the days sales outstanding ratio as 365 times the average accounts receivable divided by sales. So let's calculate the days sales outstanding for the year 2018. 365 times, let's look at the balance sheet for accounts receivables. Please note that 2018 is the first year of operations. Consequently, we do not have the average of the accounts receivables as we do not have a previous year. We have accounts receivables in the year of 2018 of $15 million. So, in our formula, we will multiply by accounts receivables of $15 million divided by sales of $50 million, which is equal to 109.50 days. The unit of days sales outstanding ratio is days. It means that the receivables are collected, on average, every 109.5 days. The shorter the days sales outstanding, the better. Next, let's calculate the days sales outstanding for the year 2019. Equals 365 times, let's look at the balance sheet for the average accounts receivables in the year 2019 and 2018. We have the accounts receivable of $26 million in 2019 and accounts receivables of $15 million in 2018. So, in our formula, we will multiply by the average accounts receivables of, open bracket, 26 million plus 15 million, close bracket, divided by 2, divided by the sales in 2019 of $60 million, which is equal to 124.71 days. The unit of the days sales outstanding ratio is days. It means that the accounts receivable is sold, on average, every 124.71 days. The shorter the days sales outstanding, the better.